Hello traders and welcome to another video review. Today is Friday, May 22nd, 2026. Let's take a look at the economic calendar for today. Very important data releases. Only one is for today and it's already been done. German GDP in line with the expectations, 0.3% up from 0.2% last time. So a little bit of the increase in the GDP in Germany, and that's about the very important data releases from the economic point of view. So without any further ado, let's switch to the charts and we start with euro dollar. For our time frame chart of the euro dollar is showing us a very nice tight range trading. Local low right now is a little bit lower than it was last time, but that's just the liquidity grabbing here, 1.1577. Nevertheless, as you can see, the momentum keeps moving higher even if the market keeps doing the local lows. The upside is limited to 1.1645, where the supply zone is located. From the bigger point of view, you can see we got this big channel here, and this lower line of the channel can be treated as a trend line as well. With this kind of the momentum, 42 points only, we might expect another movement to the downside. However, from the Elliott wave point of view, we got perfect three waves to the downside done here. Let me just take a look at the Fibonacci extension relationships here. So what do we have here is, well, a little bit over 100%. So the length of the wave A is a little bit over 100%, so quite not what I have been expecting. So we might still see another extension to the downside in the euro dollar. British pound is looking quite interesting because recent movement to the upside resulted in a local high at 1.3462, and the range is getting tighter, but the momentum still bounces up and down, oscillates around the level of 50. So this is the level of a 50 neutral level. So neither bulls nor bears are in charge of the market, and that's correct, because any breakout for good above the level of 1.3446 is bullish, because there is some sort of the technical level here, and it's the beginning of the, let's say, supply zone. Let me just make this, okay, not this one, this line here. Let me make it here, and this one was here. There you go. This is the supply zone. There is one more interesting line here I would like to show you, level. So you can see right now we got this situation here with, there you go, this level, this level, this level, and this level. So that's pretty much local intraday. What? Yes, you guessed this right. This is the supply zone. Let me just change the color for the red, so you got it here like that, and that's about the situation. There you go, and this is it, the supply zone here on the British pound. Any breakout higher is bullish, any breakout lower is obviously visibly bearish. So from the other side of the trade, we got support 1.3378 and swing low 1.3302. US dollar versus the Japanese yen keeps moving steadily in the range. The range has been located, and you can see that the top of the range is, well, roughly 159.36. Bottom of the range is 158.68. As the momentum slowly fades away from the extremely overbought conditions, but the market doesn't actually want to go lower. There is no immediate sell-off, there is no immediate bearish price action. Quite opposite, we stick to around the level of 60 on the hour side, as the movement to the upside continues. Right now it's a little bit of the pause, a little bit of the maybe some kind of a profit taking, and maybe some sort of the pullback is taking place right now. Nevertheless, it's still a bullish outlook for me. US dollar versus the Canadian dollar, we didn't look at this one for quite some time, so the current situation is like that. Very, very nice movement to the upside. So let me just mark the levels. This is the technical support, 1.3549. The other level here is 1.3524. This is daily time frame chart, only 20 pips of a difference. The other situation here is 3503, and the third level here is the swing low, 1.3481. So pretty solid, as you can see, straight on, pretty solid demand zone. Right, so let me just place this situation here for the demand zone, and we got this on a daily time frame chart, very, very solid demand zone. Dips are being bought roughly around this zone. Now the technical resistance is located, obviously here there is some sort of the situation here, 1.3965. The other situation here might be located, the other technical resistance might be located here, and obviously the swing high is located here, November 5th 2025. We can make it a little bit thicker for your convenience. Now this can be our, let's say, supply zone. No problem, we can do it like that. Obviously doing this, there you go. So this is our supply zone. However, this supply zone might be a little bit bigger. I think that even this level here might be incorporated into the supply zone. So let me just change the color so we are on the same page. There you go. So quite big supply zone, quite big demand zone. In between there is potential a line in form of the trend line. Let me just take a look. Okay, let's do it. This one, this might be something like that, right? No problem whatsoever. Trend line is here, and we stick below the trend line. So right now I guess that we retraced more than 61% of this recent movement to the upside. Let me just take a look. So this one goes here, this one goes here, and how much did we retrace? Well, we almost hit the 61%. So 61% is located roughly around let me just switch this and move it. Okay, so that's completely not what I want to do. Yeah, this charting is not really state of the art. It's more like a kind of difficult to navigate. So we need to do it like that. There you go, because I don't want to grab it. Here you are. We almost hit 68% of the retracement. The 68% is roughly around 1.3805, right? So if we break above the 61% Fibonacci retracement, then we will enter the very strong supply zone and trendline resistance. If we move lower, then of course momentum should follow the movement to the downside. For now, bullish outlook is expected. Gold. On a daily time frame chart, you remember our point of view on gold. This chart shows you ABC to the downside and the recent price action that started roughly around 4,500. Nothing changes here. Negative momentum. Yet again, let me tell you once again that the situation here is quite interesting, because if we're talking about the Elliott wave, WXY wave expansion, corrective waves, obviously it's a big correction, time consuming and complex corrective cycle, and the wave Y might be any wave now. Irregular, flat, triangle, zigzag, whatever, you name it. Okay, so please consider the situation here that we doesn't have to go below the low of the wave W in order to complete the wave Y. That's my point. And now let's say, trend line to the extremes looks like this. By the extremes, one support point. S&P 500 on a daily time frame chart looks pretty much bullish, very strong momentum. On a 4-hour time frame chart, we are challenging 7,500 level yet again, so the situation looks bullish. Right on 61 points on the RSI. I guess that this bearish momentum, this bearish divergence has been resolved already. This is the biggest correction during this up move, so we can remove this this situation here from the chart. We got the correction, we got the pullback. Now the market is ready to continue the upside movement. Let me just take a look if we have crude oil. Yes, we have a crude oil. Now let me just move this. Oh no. Let's leave it here. I just want to move it like that. There you go. So that's the gap, retail gap from the end of the April 2026. Still has not been filled. Negative momentum, negative movement to the downside. Right now we are below $100 per barrel yet again. Let me just change this colors for the levels yet again to more correct one. There you go. This is the supply zone right now, technical resistance. As you can see, market recognizes it and it gets immediately rejected. So there is some kind of a bearish pressure being built on the crude oil. Right now we broke below technical support at 98.24. Local low here was made at 90, I guess 6 will be 95.76. So any breakout lower means this level here will be tested, but I don't think this level is being used anymore. So I guess we should move it here. And that's the low from the May 7th, and it's 89.86. So please keep an eye on the current situation on the crude oil. Very interesting situation. And the last but not least, the Bitcoin. We went minus 8.21% from the swing highs in May 2026. As I said, this situation here is very, very interesting because we hit the supply zone and we got rejected lower. Right now we are trying to move higher. 78,200 is the local high made after the breakout above the level of 50, but we oscillate around this level right now on the momentum, and it doesn't actually look like this market wants to stop moving lower because there is no decisive breakout in the momentum, and it looks like we might see some sideways action or even the test of the recent low from the May 18th 2026 located at 76,050, and then breakout obviously lower might happen as well. So for now, rather bearish bias is more applicable here, as the momentum is trying to break above the level of 50, but so far no avail. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.